Hey everyone, Ads from UTG here, Unity Trading Group, and we are adding another installment to our beginner video series, and that is how to draw Fibonacci. So Fibonacci comes under one of my most used tools, alongside support and resistance, supply and demand, RSI, MACD, everything like that, and it really gives you a really clear look at the market and where the areas of interest will be, either on a downward sloping move or even an upward sloping move, to determine where the price will retrace to coming down or retrace to coming up, depending on the way you draw fibs and what market direction you're anticipating. So Fibonacci, we have got the tool on the left hand side of TradingView, third row down. Click on the little arrow and you'll find Fib retracement and trend-based Fib extension tool. They're the two that we'll cover here in this little video series now. So the way that you need to draw Fibonacci depends on the direction of the market at the time. So if we just hit the replay button and get rid of some of this price action here, we'll see that price is retracing back to the upside after this pretty long move, or pretty long dump to the downside from about that 10.5 level all the way down to the 3.5 level there on BTC. So the way you draw Fibonacci is quite simple. You need to look for the swings. So you need to look for the high extremities of both ways of the market, the swing high to the swing low. So as we want to look at the retrace to the upside, we need to draw Fibonacci the opposite direction. So we need to find the swing high to the swing low, and we need to draw it downways or downwards to really gauge the levels that price will come back up to. So what I mean by this is that if we go to Fibs, get our Fib retracement tool, click it on the swing high and drag it down to the swing low, we will automatically get these levels printed up on our chart here: the 23, the 38, the 50, the 61, the 78.6, the 88.6, and back to 100% there on the right hand side, excuse me. And they will determine the levels that price will respect or try and reach coming back up to back to the mean or back to the scene of the crime at 100%. So as we see from our swing high to our swing low, this move in general, all right, we're looking at this move collectively here. We are seeing that price is well respected on the Fibonacci retrace levels on the entire way up. So we see the 50 being respected quite well. The 61 also didn't prove too useful in this sort of scenario, but we did push through right up to the 78.6. And on the way up, we did, expect these levels to be respected all the way from the 23, the 38, and upwards from there. So if we play this chart live, we can sort of gauge where this price will respect these levels as well. So the next level being, your 88.6, and then the next one following that would be 100 retrace. So we did get there on, just short of that on the 1st of Jan. But the interesting thing with Fibonacci is if you set it up this way, the way that we've got it set up, and I'll double click on the screen now, I'll go to the settings so you guys can pause and see how you guys should set yours up if you want to set it up similar to what we've done. We can use the extension tool as well. So the 127.2 will be a valid area for moves past that 100 level. So if we get back to the full retrace of this move, if we get back to all the way to where the scene of the crime started, we can even use, if we do break and close above that 100, if you get some price action above it and start making higher highs, we can even use the exact same Fibonacci targets, the 127.2, to really gauge where this price will go. And I can show you this live as well. And there it is. So not only have we determined the information between this move, obviously in this area here, where price will, retrace back up to, giving us, the 78, 61, 50, 38 levels, where you could use where you could use Fibonacci for areas of interest if you're buying down here, for example, and looking to where you should be taking profits. You can also use the same swing high to swing low to gauge where price will go if it exceeds this 100% level. So that's all well and good. That's all well and good. You know, we can see that you've drawn fibs from swing high to swing low. But what happens if we want to, you know, gauge where price will go if we are descending, not only, you know, retracing back to the upside? What if we want to know where price will end up if we start a downtrend? So to really gauge this sort of scenario, we'll have a look at this level, at this, you know, movement all the way back down from the 28th of Jan all the way to, you know, late December in 2019. We'll look at this sloping move, and what we have to do here is we have to draw our Fibonacci from our swing low to our swing high. So drawing fibs from swing low to swing high will determine where the price will come back down to if we do start to decline, and where you can expect these prices to end up. So for this example, we'll use the swing low to swing high. So for this particular range, we'll use our swing low all the way back down here from January to our high in June. So we'll draw our fibs, take our Fibonacci tool there, get the lowest point, you know, right, bring it all the way up to the swing high there, and we can see immediately where price will start to descend, what areas the price will get to, using the Fibonacci levels as support all the way back down. So the first thing that really comes to mind is the 23 and 38. All right, so 23.38 was very well respected off this swing high. Okay, coming back down and giving buyers another opportunity, if you're buying at the 38, to really sell the next lower high at the 23.6. And then failing that, we were descending all the way back down to our 61, which is our golden level. We call it the golden pocket between the 50 and the 61. And that's where price does usually gravitate to on moves, on larger scale moves to the downside, to the upside. So the golden pocket ratio, or the range, was very, very substantial in this instance, where the price came back down to the 7347 level on BTC, or the 61.8% on the Fibs, to give us a really nice buy area there. And you can also use, you know, your Fib targets or your Fib levels to the upside without even moving them, might I add, for, you know, areas that you should be getting out of the market, or you should be taking some level of profit if you were in off that 61. You know, even descending all the way back down after this 38 touch, we were even able to leave the Fibonacci levels all the way in, all the way down to the 88.6 at this 4,500 level for BTC, and still be successful. So you're looking at data that was between February and June to give you ideas of where price would be, or price would end up in March the following year. So it's a fantastic tool, an absolutely stellar tool to able to give you an idea on where price will go. And obviously moving up from there, if you were buying off this 88, 78 level, you know, just in March of 2020, then you could have updated your Fib level like we did in the first instance, where we were looking for retracements or you know, movements back to the upside. You could even go from your swing high to swing low, and then determine where your upside targets would be based off this information that we were presented with us after you made your buy down on the 88.6 and 78 level off that swing low to high level on the Fibs. So using Fibs is a very, very beneficial tool to add to your arsenal if you're not using it already. Most traders do use it that I've, you know, encountered over the last couple of years of doing this. So it's a very, very easy tool to master. Now, just a quick touch on our trend-based fibs. Okay, so this is the one under your fib retracement here. All right, so trend-based fib extension tool. It's a very, very good or very good way to determine where price will go if there's no data. So let's say, for example, here, let's take away some of this moves. So let's say that we don't know where price will end up after here. So let's say we're talking about entering the market in June of last year. We have no idea where price would go. We'll pretend that there's nothing to the left as well. We've just got this area to deal with. This is also really nice for new stock, new coins that are coming onto the market to determine where they'll go. If there is a substantial move to the upside, you can also use your trend-based fib extension. I know this is a lot to take in, but just watch very carefully. It's really, really nice tool to use. So if we take our swing low to high again, all right, so if we go swing low, let's take it from the very bottom this time, swing low to swing high, all right, or swing high will be here in this instance, all right, because we're looking at the next step of this, and it'll become very apparent why I've used this swing high, because we have to use another swing. So you go from swing low to high and then down to the pullback, all right, and that'll give you upside targets as well. And if we start to play this chart, we can see some of these levels being respected quite well as well. So swing low to swing high to the retrace for the Fibonacci extension, 1, 2, and 3, all right, to give us areas of interest where price will go to with no data. So immediately we've got the respected 0.5 level or the 50 level. We've got the respected 618 level here. And then also we can determine where the top will be in this instance with the extension 1.272, which is our 12892 level, which was respected quite well, that you can see just in those tops there. And even coming down, our 78.6 level is respected also. So another example, we'll go through one more example with our trend-based to give you a decent idea how you would be able to use it. So we'll use it in the opposite direction this time. Let's say we didn't have any of this information, okay? Or any of, let's say we'll go back a little further. So we didn't have any of that information. We want to know where Bitcoin will end up off this substantial pullback. So you can use your Fib extension tool, okay? Trend-based Fib extension, swing high, swing low to the pullback, okay? And if we play this chart just only a little bit, only a fraction of the time that we need to play this to really determine how really nice this tool is. So swing high, swing low, and the retrace, okay, or the pullback, we can really easily determine where these levels are going to be respected on the way down and on the way up. So the 2.272 gives us a very, very clear indication that 4449 or 4,450 was going to be a level of interest on this way down. So this is all well and good in hindsight. Put it to use, get used to it on your charts. If you want to know more and you want to get involved with us, or even join our Discord, ask questions, have a look at our indicator suite, you can find us at unitytradinggroup.com and hit the join access, instant access and join Discord buttons to get involved even further. I'm Ads from Unity Trading Group. Thanks for joining us, and we'll see you in the next video.